How do I calculate sales tax? If you are a small business owner wondering how to calculate sales tax, you are not alone. Many remote sellers face this challenge, especially with varying state and local tax rates. Let's break it down step by step to make it easier for you to understand and apply. First, you need to determine the combined sales tax rate. This rate usually includes state, county, and local taxes. For instance, if your state has a rate of 5.6%, the county adds 0.7%, and the city adds 1.75%, your total sales tax rate would be 8.05%. It is essential to identify the correct rate based on the buyer's delivery address. You can use online tools or tax software to check the rates for specific locations. Next, classify your taxable goods and services. Taxability can differ from state to state. Generally, physical products like electronics and furniture are taxable. However, essentials like groceries and clothing may be exempt or taxed at a lower rate. Services are often exempt unless the state specifically taxes them. As a remote seller, you should review the guidelines for the destination state to categorize your items correctly. Some digital products like ebooks may also be taxable in certain areas. Now let's calculate the taxable sales total. To do this, sum up the prices of all taxable items in a transaction. Be sure to exclude any exempt items. For example, if you have a $1,000 invoice with $200 in tax-exempt goods, your taxable total would be $800. The next step is to apply the sales tax formula. Multiply your taxable total by the combined rate expressed as a decimal. For an $800 taxable total and an 8.05% rate, you would calculate 800 multiplied by 0.0805, which equals $64.40 in sales tax. Add this amount to your original taxable total. So, $800 plus $64.40 gives you a total of $864.40. If you had not taxable items, include them in the final total after tax. For instance, adding the $200 of exempt goods results in a total charge of $1,064.40. For remote sellers, there are practical considerations to keep in mind. First, understand the Nexus rules. You must collect tax in states where you have a physical presence, economic nexus, or other connections. Second, consider using sales tax software to help track rate changes, manage multi-state filings, and apply the correct rates based on delivery addresses. Lastly, keep records for tax-exempt transactions, such as sales to resellers or nonprofits, to avoid issues during audits. Be aware of common pitfalls as well. Misclassifying items can lead to underpayment, and using outdated rates or ignoring local surcharges may cause compliance problems. Also, make sure to meet state-specific deadlines for tax remittance to avoid penalties. By following these steps and staying updated on jurisdictional changes, you can accurately collect and report sales tax. For remote sellers, automating tax solutions can simplify compliance across different state requirements.